All right, welcome everyone. Hope you all can hear me. If you please go ahead and let me know in the chat box by typing in a 1 for yes, 2 for no. And if you type in a 2 for no, I know that you lied. Good morning, good morning, good morning. Or afternoon. Hey, John. Yeah, so that's a good point. So everybody seems to be muted at this point, Will, except for me. So I appreciate you saying that. We got a little bit of feedback, Will said, on the mics as everybody was going at once. So, oh, good. Charlotte finally got to you. All right, excellent. Will, really good. All right. Well, welcome everybody. I hope you're having a fantastic day. I hope it has been a good trading day for you. It's been an interesting one so far. We'll call it that to start off. As we do get started, keep in mind everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something that you like, anything, make sure it fits your own personal risk profile and risk tolerance before ever taking on a trade, a setup, or using an indicator. All right, we got a lot happening this week. Inner Circle coming up on May 13th. That would be today, right? So that'd be 7 p.m. Mastermind coming up on the 14th. That is tomorrow night. The 14th also, we've got E-mini Q&A at 8 p.m. I'm not sure how we got those two on the same date and time, but we did. Let's see, May 16th, which is Thursday, is Trading You. And then Friday, Tripp is doing his next part of his cover call series. For anybody that's in CCE, Cover Call Explorer, if you guys are not in there, keep in mind there is a trial that you can jump into that. Lee can drop a link in there when he gets a chance, but go check it out. Tripp has done an amazing job since he took it over. We've got Power Hour and Trading Coaches Playbook. We're on a regular schedule this week, putting futures in your present. I believe it's the last one that Brandon is doing, so make sure you check that out. It's the 16th at 8. And then Power Hour, Power Option Plays, rather, Cover Call Explorer, E-mini Think Tank are all on a regular schedule. All right, here's our follow us page. For those of you that are not familiar with it, we now have 2 different TikTok accounts that we're running. The Wealth Builders one, of course, and then the Trader's Mental Edge is a mindset, Trader's Mindset. We're adding about 300 people a day to that one right now, which is put us up over 10,000 people in less than a month. So we're getting a lot of activity on that TikTok, but you should be following all multiple of the platforms we have out there. Here they are. If you don't catch them or you can't remember which is which, you can always send an email in and we will reply back to you with what ours are. Yeah, Tripp said, I finally put TikTok on my old phone, meaning he doesn't use the phone anymore, just for Trader's Mental Edge. I love it. There you go. We're getting a lot of good feedback from it. So that's been exciting. All right, here is our Trading Boss Manifesto. This is what we believe it is for you to be a trading boss. You can download this right on our website, right on robertjroy.com, right on tradinglikeaboss.com. And then can you imagine your futures trading future? Brandon does a phenomenal job with it, guys. That's where, Brandon and I first spoke, was his expertise in all of the markets. But what he does with futures is great. So definitely check that out. I don't want to jump in there yet. So we're going to go ahead and, well, actually, we're going to go here. We're going to go into using your AI in your options trading. We're going to take this a little bit different than what we've done in the past. I've got 2 special guests with us, and I don't believe I've ever done that before on Power Option Plays. I have had 1, but not had 2 before. So, and it's not only for like a short segment, we're going to have them with us for the entire time. And the first one is Mr. Brandon Wendell. Everybody's familiar with Brandon. Brandon, you want to say hi?
Yeah, as soon as I can remember to click my microphone on.
There you go. And of course, you guys are able to put your cameras on as well as hosts. So if you're interested, you could do that as well. Yeah. Brandon's going to go through and talk about, well, I'll get to that in a second. And then also we've got CC with us. CC is one of the owners of Options AI. Guys, I've been real excited about this. We've been having conversations for months now. We were finally able to get together and find a date that I can get both of these gentlemen on at the same time, because I want to talk today. Well, first off, CC, I'll give you a chance first to say hi, everybody.
How's it going, Rob? Thanks for having me.
You're quite welcome. You're quite welcome. Now, most people here know a little bit about Brandon. Why don't you share a little bit of your background as far as who you are and what you guys do?
Sure. So the story of Options AI was basically came from our backgrounds, myself and one of my co-founders in particular. I came from the options market making side of this business, worked on Wall Street. One of my co-founders came from the institutional options brokerage side of the business. And the original inspiration for Options AI when we started out a few years ago was multi-leg options. And we didn't think the marketplace was serving multi-leg options particularly well. And we saw it from the institutional side of the business, that most institutional order flow looked very different than what retail options order flow looked like. And you can kind of picture that in, we're going through another little mini meme stock era today, it looks like. And you can imagine what that options order flow looks like, right? It's a bunch of retail traders reaching for out of the money calls, very expensive, all pumped, just hoping to be lucky, sort of lottery ticket type trading. Institutional options order flow looks very different. It's call spreads, it's credit put spreads, it's iron condors, it's things like that. And that was the original inspiration. And the way we sort of approached it from a product standpoint was through visualizations and trying to tell the stories of these trades the way most people think, which is stock charts and things like that. So we the at the center of our universe is putting these trades up on stock charts.
Excellent. Okay. Fantastic. And Brandon, you've been trading the zero DTE days till expiration. Some of you might have been scratching your head saying, what the heck is that? I haven't heard of it. But you've been trading the zero DTE for how long now?
Oh boy, probably about 8 or 9 years, maybe a little bit longer. I've got some friends that used to be a specialist on the floor of the SIBO, so I kind of echo what CC was mentioning about how the professionals trade. And they always told me, pros are mostly on the sell side, not the buy side of the market, especially the specialists, because they're offsetting a lot of the retail trades. So with that SPX zero DTE, I like selling options, first of all, shorter time frame during that day to take less risk. And specializing on an index option allows me to not have to worry about early assignment with those options either. So it gives me a lot of freedom and a lot less risk to be able to generate income on a regular basis.
Nice. And why do you not have to worry about the early assignment?
Well, the index options are what they call European style options. They're only exercised at the expiration, whereas American style, which you find on ETFs or stocks, those can be assigned at any time when a buyer decides to exercise their rights. Well, you could be assigned. It's just a random thing from the OIC, right? Or OCC, I think.
So right. So with standard options, folks, is American style, right? It can be exercised anytime. A lot of the indexes are European style, which is that day. So that lends a phenomenal benefit to them. Now, CC, have you guys seen a big influx in this type of strategy over the last year or two?
Yeah, it's funny. So when we first started out, it was before this. We were designing this product before the explosion in short duration cash settled options, right? Which is exactly what Brandon's talking about. And what our original intention was kind of like an onboarding for people to sort of upgrade their options trading, right? They're messing around, they're trading equities, they're wading into options, they're probably buying some calls, maybe they're doing some covered calls, like those kinds of original strategies that most people get into. And we saw ourselves as a way to kind of onboard that upgrade in a trader's life, right? To get them quickly to multi-leg trades, credit spreads, things like that, like what Brandon's talking about. We launched SPX, zero DTE trading, towards the end of last year, and it has exploded on our platform. And what we've found is that visualization that's at the center of our platform is really interesting. And Brandon can maybe talk to this a little bit too. As soon as we launched SPX and short duration and zero DTE, what I quickly realized was, with our visualization and putting these trades on a chart, it's very much more akin to sort of futures trading or you're thinking in levels. You're thinking of where my short strike of my credit call spread is and where the short strike of my credit put spread is, and things like that. And it sort of, we kind of stumbled into, oh man, we might have like a really, really good platform specifically for this. And the European style exercise assignment is, it's the future of options. I think you're going to see more and more options symbols move into this space over time, because it takes away one of the most annoying things about options trading. And just to kind of illustrate what Brandon's talking about, if you sell a credit call spread in SPX and it goes through your short strike, you aren't assigned. There is no SPX underlying. You're not going to show up to the docks in Chicago the next morning and get assigned a bunch of SPX stock, right? And as opposed to when you're trading SPY or Qs or something like that, you basically have to close that trade. Whereas with cash settled options, you don't necessarily have to close that trade. It's just going to be settled at the intrinsic value at the end of the day. Of course, you can close the trade, but it's a really interesting dynamic that makes options trading so much simpler to navigate, and you're not spending a bunch of money closing trades and things like that in SPX and Q.
Excellent. Good. Very good point. I've traded the SPY and the Qs for decades. I think I released one of the very first ever trading the Qs webinars or trainings back in 1999. I did a live training on it. And so I'm very well versed in that. And it's a great point that the exercise of these positions are cash settled, back to what you said, CC, of like futures.
And let me give it a great example. And it's funny, right? Is every 3 months when we get into the heart of earnings season, I always send out a couple of tweets reminding people that if Apple is reporting after the bell, or Amazon or Meta or something like that, that those QQQ options that you have going into 4 o'clock Eastern are not going to be worth zero. They're going to be worth a lot. So if you're on the sell side of a QQQ trade and Apple's reporting at 4:30, you're never going to be able to close that for zero. They're still priced for what's going to happen at 4:30 Eastern when Apple trades. On SPX, the same exact day, if you had an expiring option, you going out for a cocktail. You don't care what Apple does, right, at 4:30, because you can't be assigned on that option. So there's so many strengths to cash settled options.
Tremendous benefit. So Brandon, how many years have you been trading at this point now?
Trading in general for over 25 years. I kind of started off on the retail buy side where I was a broker, then moved into back office operations. So they called me, I guess it's agency desk operator. I was dealing with the order flow from the brokerage, both retail and institutional, and getting the orders filled through market makers. So yeah, I've been doing it for quite a while.
Very good. And Cece, how long ago did you start with working on the floor?
It was right out of college. Do I have to say how old I am? So
no, just tell me how many years of trading is goes
it was in the late 90s. And it was my first job out of college. And it was interesting. I knew nothing about, I wasn't one of those kids that grew up reading the Wall Street Journal or anything. But I did go to school in Philadelphia, and we used to go to Atlantic City late at night. And a friend told me, he's like, hey, I just had this interview with this company. I think, it sounds up your alley, just doing sort of probabilities, like options is just probabilities.
Absolutely. So just if y'all haven't figured this out why I asked that question yet, Brandon's about 25 years, CC's about 25 years. I've got a little more than 25 years in there. Guys, between the three of us, we're at 75 years experience. Talking to you today about one thing that I feel so passionate about. I was willing to not only give up my platform on a Monday to talk to y'all, because as some of you may know, speakers do like to talk. But to be able to bring everybody together here, I think this is a recording that's going to hit some big numbers for us on I mean, we're seeing it here, who's attending now, but when it comes to some of the stuff on YouTube and the other platforms we put it out, I think we'll have people watching this over and over again as we start digging into some of the meat behind the trade types and how they work. So Brandon, I want to start with you then, as far as you gave us a brief description of what of the 0DTE. So you do this right now. Are you looking for these types of trades on literally on a daily basis, Monday through Friday, or are there days that you say, no, I don't want to trade this one today?
Well, I mean, one of the other reasons why I use SPX is it's liquid. So somebody asked about, what do we mean by cash settled? Cash settled means that loser pays the winner. If you have a loss, you will have to pay whatever that difference is that you lost. The winner would gain that amount. But basically, these are some of the most liquid options. You get in and out very quickly and easily when you need to. Not always. I mean, there are some caveats there. But as far as, the way I'm sorry, the original question, I totally went off topic there. Sorry,
so, basically, a little bit about when we talk about these, are these something that you trade or look to potentially trade every day?
Every day, right? Thank you. Now I remember. Sorry, it's been a big, busy morning. The reason why I choose SPX is they're called weekly options, even though they are offered almost daily. There's only a few securities that actually offer that opportunity. They're expanding the choices, but as of right now, it's very small. But yes, I like to trade them almost every day. The reason why I may not want to trade them is if the volatility is extremely low. Since I'm on the sell side, that means that the Vega is very low and the premiums that I would collect are not necessarily worth the risk I would be taking. So there are times where I cannot take the trade due to market situations, or if there's going to be extreme volatility, say with the Federal Reserve, sometimes it's better for people that are, depending on the experience level of the trader, and I try to lead by example, it's better to stay on the sidelines and pick your battles. Look for the high probability opportunities and take those rather than trying to take everything that comes along.
Right. So I've seen, so those of you that may or may not be familiar with it, Brandon has a text alert service on SPX. I'm actually pulling it up on my phone right now, although I probably have to go through 90 text messages since the weekend with Mother's Day of everybody sending messages back and forth in family chats and the likes. But you send those messages out, Brandon, on a regular basis and daily, right? Basically.
Yeah. I'm a little different in the way I do it too, because I'm a charter market technician. So I've done technical analysis. That's kind of like a master's degree in technical analysis. And I use not just the order flow from institutions that I can see and identify, but also looking at the charts on the underlying securities. I use, and I teach this, by the way, people have access to this in the SPX cash flow program, the education, how to do this. But I use what is called supply and demand zones in conjunction with trend to find the highest probability opportunities. And I trade around those. So it's not just simply picking out some options saying, maybe I'll go with these. And there's so far away, it's probably not going to get hit. No, I'm looking for the balance between the proper reward I can get on a regular basis, mitigating as much risk as possible, and looking for the highest probability. And I use the tools available to me to send out those SMS texts. I send out the levels so that way people can make their own educated decisions on whether or not they are quality and want to follow along. And of course, the ideas that I'm doing to give an idea, to basically show people what I'm looking at and what I'm doing.
Right. So you sent a text out on Friday that said a bull put spread may be available, selling 5,200, 5,205 for 35 cents and the 90% pop. What is pop?
Yeah, that's a probability of profit. And it depends on different brokerages calculate slightly different ways. But it's probability of profit. And honestly, some of the times when I look at those are the ones that are coming in from the source that I use, like on Options AI. When you go ahead and look at something like on their platform, it's pretty easy to interface with and find out information. They have both when you put in the position, they have a pop there, which is probability of profit. And they also have the likelihood of the price movement by the end of whatever period you're looking at. It adjusts. I obviously look at 0DTE expiring that day, but you can even go out further and it'll show you kind of like a cone on Options AI, like where they're expecting, based on the movement of the security, where it should be going to maximum for that period. Now, it's not guaranteed. Obviously, volatilities change, but then the program would also recognize that and change as well.
Excellent. CC, can you share your screen with us and bring that up on the screen to let everybody see how Options AI works with what Brandon's talking about?
Sure, let's go in. And just to sort of further the probability of profit conversation, I mean, that's one of the amazing things about the options market is it is telling you, I always compare it to like a horse race. Like if you're at the track and you get the odds before the horse race, the options market is essentially you being able to place bets on those odds all the way up until the finish line, right? And that's one of the amazing things about the options market is, exactly what Brandon's talking about. So here is a one-day chart of SPX. Can you see that, Rob?
I can.
Okay, cool. And this is a one-day chart of SPX. Here was this morning's gap higher. We sold off. We got a little bit into the red. Now what are we? We're basically unchanged like the last 4 days. And what's going on here is towards the end of the chart, what we're doing is we're pulling the live data from the options market right now. And that's the IV, that is, what the options, the at the money straddle is pricing and everything. And we can basically see on the chart that the SPX options market right now is pricing in just a 0.2% expected move is the term until the end of the day, until the close for Eastern. So that corresponds right now with SPX at 52.25. That corresponds to 10 points in either direction, right? And a lot of times what you'll find, and this sort of is interesting with the way, with the way Brandon's alerts work, is he's talking about those supply and demand levels. Oftentimes you'll see this line up with, so here we have, what am I, one day, here we have that gap higher today. And the expected move is right to that level right now. And that's basically where the market found sellers. And, if we were to do a trade right here, let's just do an iron condor. Let me move all my chats out of the way. Let's see. All right, I'm going to select today as the expiry. And what this does is what Options AI just did is it produced an iron condor based upon that expected move, right? And so Brandon's alerts might be, he might want a little bit more room on the upside up above this level and where he saw that seller supply. And you can adjust that. And what you're getting here is this is an iron condor, a credit call spread. And the bottom part of the iron condor is a credit put spread. And you are positioning for the SPX to stay within this green zone for the rest of the day. And the options market is giving that a pretty decent likelihood. Now, that's no guarantee, obviously. It can bust through. You could get stopped out. News could come out in the next 2 hours. But right now, this condor, which has a short call at 52.40 and a short put at 52.15, you can sell this risking $385 right now to potentially make $115. And the options market is assigning a 70% probability of you being correct.
All right. So let me ask in the chat for a second. Give me a 1 for yes if you guys can get excited over what CC is sharing with you right now. Does that kind of make your life? You may not fully understand the strategy yet. We're going to dig into that a little bit. But think of all your option types trades. If the computer generated a brain much bigger than ours, right, is generating these ideas, these thoughts, doing all the math and calculations. Y'all know how much I hate math, right? To the point I still use this old flipping calculator. Okay, love this thing, right? But that's me. The computer does it all for you, right? Tons and tons and tons of ones in there. Excellent, excellent, excellent. Good. So I love it, the way that it pulls it all together for you, CC, and then it's a simple continue, and does it give you
you go right to,
or
you go right to the ticket right from here, and then you could put in the contract. Let's change this to 2 or 12. I just did it with a typo. You can see the new updated max risk, max gain, probability of profit obviously stays the same. It's the same trade. You can go into review order. And it gives you a little summary. And it's basically, in this case, you're risking $4,600 to make $1,400 on a 5-wide spread. That's important. Like these strikes being 5 points wide. Your net credit, I probably picked one of the most complicated trades to explain, but your net credit from this call spread and this put spread that you're selling, the stock can only finish in one of these directions if it goes badly, right? And so it can't be like Schrodinger's cat and finish both above and below this trade. So your net premium received for both of these credit spreads is your max gain, and that subtracted from one of the sides, one of the widths, is your max risk. And so your max risk is your $1,400 rounded up right here. And at expiry, you see how it produced these break evens? So at 52.41 to the upside and 52.14, let's call it, to the downside, that you need, for max profit, you need the SPX to stay within those two levels at 4 o'clock Eastern today. Or you could get out of it for profit before then.
Sure, you can close it early, and Brandon does that as well. I've seen that, right, Brandon, multiple times on your messages, where you can close out of it for 5 cents, or the iron condor can be closed for 5 cents or held till close. This was on Friday at 3:07 p.m.
Right. It just depends on the entry and, again, what the personal risk reward ratio looks like, and also perhaps the movement in the markets, how the price is moving. There's a question that just came in about, are you able to get out if things go bad? I monitor a lot of these positions, and I actually will send out an SMS to let people know if it's approaching a stop loss area. The way I have the program structured in the SPX program, it's very structured, which we need to have consistency. We follow the rules over and over again, and it's very simple. If you have an open position, you go to that and you can actually exit it very quickly. There's a button that says modify or exit position in the options AI that makes it easy. You could also perhaps place a limit order to get out if the premiums get to, or a stop or limit order to get out if prices go beyond a certain threshold as well, to kind of protect you on either side. So to answer that question about, if things go wrong, can you get out with an exit, or can you set the exit? Yeah, you can.
Excellent. Right. So, and I do see that. So multiple times, guys, when Brandon sends these text messages out, and just to give some credence to what he does, I have a very good friend of mine who is in Brandon's SPX. We'll just call him Steve. And he's a good trader, just doesn't have a lot of time in his life. So I hooked him up with, brought him in to introduce him to Brandon's stuff. And he started just trading everything that Brandon was throwing out there. And he was doing it all on paper, of course, to start, because although he knew and understood iron condors, zero DTE was a brand new concept to him. And he got to the point that he said, you know what, I've discovered two things for my own personality. He said, the Fed's coming out to talk today. I'm not trading it no matter what. I'm just going to take that day off. I think I deserve it. He said, or if Brandon puts out that this one might be considered an aggressive entry, he goes, I'm not an aggressive trader, so I'm going to pass on those. But Brandon does a great job of being able to tell you, hey, this one right here, higher probability, aggressive, he lays all of that out in there. And then to reiterate all of it, taking it right back into the options platform and options AI with CC, and being able to see those numbers for yourself and confirm them, rather than just relying on what you see come across the text message. You get to see it right in front of you. And I do know that most platforms out there are not capable of doing the things that options AI is, hence which is why they're the only firm when it came to equity options that we've ever brought on to any of our trainings at Wealth Builders at all. So let's see. So we got a couple of questions came in. Sorry.
Yeah, one of the questions, I just did it sort of in the background, was I think they wanted to see an executed trade. And so then the other thing we do with this visualization is you can then watch this trade play out, for lack of a better term. So I just placed this SPX trade, and this is a test account. That's why you can't do fills in other than 5 cent increments. But let's say I sold this at 115, right? So what this is now going to do is this is going to play out the rest of the day, and you see this updated expected move going off into the future, and this is just for, you know, the next 2.5 hours. And what this will do is give you updated probability of profit, updated probability of max gain and max loss, what this would be worth from a profit and loss standpoint if it was 4 Eastern with the stock right here, with the SPX right here, and then obviously what it could be worth minimum and maximum. And so you can, it's fun. I mean, it's real money, but it's fun in that you can watch this, and there's some crazy ones. Let me go back to, maybe I can go to my positions here. I'll show you, you know, I took an iron butterfly, which we won't even get into, but I thought this 5,200 level was really interesting this week. So I placed a hypothetical butterfly trade, and you can see this. I did this towards the end of last week, and you can see this sort of playing out within these zones. And now we're up at 52.66. The max profit of this trade is at 5,200 in SPX, but you can see this updated expected move up here, and it's putting this trade at risk to the upside, to this break even. And you can see what I would lose if that happened, right? So this is you know, we wanted to make all of this very intuitive, because it's my theory that a lot of people get a little flustered in options trading because of that wall of numbers, and because of all of these, you know, Greeks and theta and vega and things like that. And it can feel overwhelming. And when you're overwhelmed, sometimes it's difficult to see the forest for the trees, right? And in this in particular style of trading, and what Brandon's doing with his alerts, and it's sort of what I was getting at with, this is easier than it seems, right? Easier is not the right word, but this is, if this is intuitive to you, meaning I have a break even on the upside and I have a break even on the downside, and I really want the stock to stay within those. And if it starts challenging my trade in either direction, I might need to take this thing off, right? And if you can boil options trading down to that, especially short duration options trading, it becomes, your decision making becomes so much easier.
Exactly. And, you know, they say that when you give a speech, you never know who's in your audience, so you should be giving the speech at a 5th grade level, right? But if you do it at 3rd grade, you're better off, right? And the reason behind that is not that you are trying to talk down to people. It is that when you're given that presentation, you're using words that can easily be understood, or in this case, visualization that's easily understood. Guys, what CC's team has done is taken what can become very complicated. So I had a sell an iron condor, and then I did a bull put spread and a bear call spread. And then I've got a fall in between these levels, but there's a little bit of credit on both sides. So I've got a little extra wiggle room. They're calculating all of that for us and telling us, oh, and by the way, if it changes, this was it when we went, or this is it when we went in, and the day has moved and it's now here, right? It's showing where expected moves are and so forth. So you can determine there with things like that, such as being able to roll out or exit out of one side of that trade. So Brandon, would you ever use something like that? As you did the iron condor, it started to move up on one leg, you get out of your leg that was in good shape, and then sell another one to bring in a little more premium and even offset some of your risk in the trade.
Yeah, you're talking about kind of like rolling the position, rolling up or rolling down. It is possible. It's something that I do sometimes. However, with the SPX program, I do mention it and how to do it in the education that I have. However, because of the wide range of traders that I have that are following me, it's kind of difficult sometimes to do the entire roll. So it's easier to say, listen, we're going to get stopped out if it hits this area, or if this happens with the premium, and have a set reward to risk ratio. That way we know exactly what we potentially are going to lose when we get in, rather than having to do the roll. But it is possible to do that and even roll further out in time to get more premium, especially when we're dealing with these index options. They expire pretty much every day on those weeklies. So you can just roll one day. I used to trade these when they were 3 days a week. So you had to roll sometimes over the weekend, extra time value, but more risk, obviously. So yes, there are things you can do to adjust or what they call repair an options position, or roll it up or roll it down if you're doing iron condors, and fix them if they're being threatened. Absolutely.
So just as I said with CC, where they thumb it down on the screen by making it easier visually for someone to see, if someone is newer to trading these and is not very familiar with them, you've thumbed it down, for lack of a better term, to make it more simplistic for the average person to understand.
I definitely do. I try as much as I can. Is my background, I'd like to joke and say I'm genetically engineered for this position, because my father's a retired stockbroker. My mother's a retired school teacher. So I got, the genes of the teacher and the broker, but I do try to educate properly so that people can understand. And I created both educational videos for each piece, understanding what a vertical spread is, how the strategy works, both the bull put spread, bear call spread, and the iron condor, and even educational videos on the software, how to place the orders properly, and I'm putting new information out there on a regular basis. We meet on a regular basis as well to have open Q&As. And in the SPX program, actually, people can message me at any time. If they're students, they can easily get a hold of me too.
Yeah, it's funny. I was looking at that. We've got it right on the members area. There's a message Brandon, and that message goes into our support staff. They then send it over to Brandon, and they're making sure that the message went through, that it's seen. Brandon gets it. He gets a reply back. We log all of those questions and answers in your individual account. So we keep all of that available. So we got a couple of questions. Probably should hit some of these as we continue. So Alan had asked, do you use delta as a measure of risk in determining whether to place the trade? What are your thoughts on that one, Brandon?
Sorry, I was actually typing in the answer, some of the answers in the chat as well, trying to respond. But yeah, when it comes to delta, for the most part, when you're doing iron condors, you're more delta neutral. Delta is a measure of potential profit based on direction of movement. When with an iron condor, we're playing volatility, which is vega, and time, which is theta. We're actually anticipating that the prices will not move as much, or at least basically stay between a level. So with delta neutrality, I don't need to use that really as a filter as much. It will have a bias to one direction or the other when you put on the position. A question I sometimes get asked is, instead of putting it on all at once, could you leg in to gain more premium? Say, if prices are coming down, could you put on the bull put spread? And then as prices were to rise, could you put on the bear call spread to build an iron condor? And the answer is yes, you could. Absolutely. It's a little more time consuming, but if you are there watching, of course, I've already sent out the text for the levels, so you could use those however you see fit, especially once you learn the strategy. And yes, the program, I saw another question, it does work with both debit and credit spreads. Actually, I think CC still has it on the screen. It shows call spread or call. That would be a debit, and then the credit put spread is the only one that's the short side selling.
Nice.
Yeah,
okay.
It's interesting. Just to follow up on the delta question. So delta carries a lot of meanings in options trading, and one of them is the net delta of your position, right? And it's the shorthand to say, all right, I am long one of these call spreads, and its delta is 25, right? And so that's the quick math of saying that's the equivalent of being long 25 shares of this stock, roughly. So that means that if the stock went up $1, that you would make $25. Basically, it would increase by that much, right? So the other way that delta is used, and it's going back to that probability of profit section that we talked about, is that probability of profit is being pulled from the deltas of the delta is also assigning probabilities across the market of all of these options finishing in the money or out of the money. So on the screen right now, I just did this is a 0 DTE call spread to the end of the day, and is buying the 52.25 call and selling the 52.35 call, right? The probability of profit that you see right there, the 38%, is the delta of that break even, right? So that's the delta of the 52.29 roughly break even of that trade. And so the options market is basically assigning 60% probability of that not happening, of the SPX not going above that level. And it's assigning a roughly 40% probability of it actually happening. And so if you did this call spread, the way delta is being used here is the deltas are assigning a 40% probability of you being correct by the end of the day on this, right? So that's the other way that delta is used. And it's interesting from the way Brandon is, the way his service is set up. If he's doing a credit spread or an iron condor and he's at those different levels, the way some credit spread traders think of that is basically by the delta of the short strike. So in this expected move, let me just clear this trade. This expected move until the end of the day in SPX, that expected move is about 20 to 25 delta levels. You'll hear that from a lot of credit spread traders. And that's the options market basically saying you are selling at a level that has an 75%, 80% probability of your trade not being violated, if that makes sense.
Perfectly. Yeah, we've talked about delta before on this channel being a probability calculator. 30 delta, 30% chance of being right. And of course, sellers versus buyers, you're on a different side of that 30%.
Yes, exactly. And we've talked a lot about, it's interesting because this is almost like full circle back to the beginning of this conversation. We've talked a lot about 0DTE, short duration, cash settled options. One of the most fascinating things that is happening in options trading is you're seeing this exploding volume in short duration cash settled options. What you are also seeing is the look and feel of that order flow and that customer is very different than what came before it, right? And this is sort of what we, going back to the origin story of options AI and what we set ourselves up for was really sort of, it was ambitious on us to assume that the retail market and options traders in retail were ready for that upgrade. 0DTE short duration trading has shown they absolutely were ready, because what you are seeing is a heavy section of this order flow is exactly what Brandon, that style of trading of selling credit call spreads, selling credit put spreads, selling iron condors each and every day in an attempt to have income, being right more than you're wrong, right? And that is that institutional mindset and that professional mindset, which is, it's actually, if you are willing to be regular about this and disciplined about this, you can make income selling options, defining your risk, and rather than waiting around for your lottery ticket call to pay off. And this market is showing that the retail audience was ready for this. They were ready to act more sophisticated in the options market than what's going on in GME today.
Right. And having software like yours definitely helps for someone to be able to do that, again, by making it simpler on the screen to see the tools, make it better and easier to do. Would you agree with that?
Yeah, and this is a great example. So we're looking at, well, let's just do, I don't know, should we do GME? Should we dare to go in there?
Sure.
So here's a great example. Let's say, I don't know, let's say you were bearish in GME, and you think that this tweet or whatever that caused this 75% move higher would eventually fail, right? And you're going out a month, let's say. So selecting bearish, this is one of these interesting behavioral studies. So bearish, you have put spread, and you have credit call spread, right? And what would typically happen is if you just went to an options chain, you would have to kind of think ahead. Do I want to buy a put? Do I want to? And it would be the only thing you would ever see. On this platform, if we just go out, let's just go to the end of the week. Here's a put, and it's showing your risk reward, your probability of profit. Here's a put spread to quickly compare, and this is generating buying the 30 put, selling the 18 put. You see, a slightly better break even. And here is a credit call spread. Oops, I think I broke it. Oh, know why this just broke? Because it generated it's running out of strikes today to the upside. So they don't have options to the upside to sell yet, or they're putting them out right now. But anyway, so you're seeing that comparison, and you can quickly flick through these trades and get to a credit call spread potentially, which you might not have even considered. And so that's sort of that behavioral. If I see these trades and I have an opportunity to see these trades side by side, I might make a different decision than had I not, right? I might have found the higher probability way to express my view.
Excellent. So Brandon, can you kind of maybe you want to bring your charts up, but can you kind of take over to the point of, from a high level, of course, I know you can't go into all the details, it's impossible, but can you kind of take over and show us what you're doing? So if you're looking at SPX right now, what are you doing right now for yourself to determine, do I want to go ahead and look at a potential setup on this or not?
Okay, let me go ahead and do the screen sharing here. Let's see. Yep, screen 2. And well, I could probably bring my coin flip into the screen. No, I'm kidding. That's but basically, this is the chart that I'm kind of working with. It's not the only thing I'm using. Actually, what I've got too, I want to show you a couple days back, May 7th, I created this chart, and this is after the close, I believe. No, it was just before the close. It was actually right around 2 o'clock on May 7th. Yeah, May 7th, as you can see, 5/7. And what happened was I identified, like I said, not just what's going on with the probabilities and the deltas, things like that, but I'm looking at what are called supply and demand zones, which again, if I go to, let me see, I think I have it open somewhere. Yeah, SPX cash flow secrets right there. You can see member area, they have these educational videos, which you can zoom in on, see if that works. You can actually see that I've got videos showing people, how to do this. I'm adding the options AI one very, very soon, working on it now. The SMSs are available. There are, where is it here? Documents. That's what I was looking for. I got the documents that show you step by step with the strategy rules and how I even find those zones. I'm pretty much an open book. I want to share and educate, as well as put out the information. There's the text message, by the way, that area there, or sorry, send a message to me that Rob was mentioning. But basically, going back to that 7th, I identified levels where prices are not likely to go based on where I see institutional orders coming in, or more importantly, leftover orders. And again, that's in those videos, as well as the education I provide in live environments. And then what I did was opportunity, Iron Condor, again, expired that day, the 7th, this is on the platform, sold 55 to 60, 15 to 20. And this was actually taken as an open after the text went out. I try to be fair. I timestamp everything too on my computer. So you can see 3:19 in the afternoon, 5/7. I'd have to look back to see when the SMS went out. But, this is, I think this might have been done before the close. Is actually, yeah, this is right around when I entered. And at that time, there's an 89% probability of profit at that point. By the end of the day, if I were to go back to the 7th on my live chart, there we are, 7th. I think, yeah, it never went beyond the zones. It basically closed the gap and bounced up a little bit. So we ended up retaining the premium that was collected. But yeah, you'll notice if I shrink this a little bit, maybe even go to a 60-minute chart, I've got lines going back years because I've been doing this for that long. What I do is I identify those areas that are most likely going to have institutional orders that cause prices to reverse. And it increases the probability by selling outside those areas. Once again, I'm not living in a vacuum either. I'm looking at bigger picture trends, seeing which direction I'm going to be likely to have price move by the end of the day. And the other nice thing is I don't take these by entering early in the day either. I can go out and right now, for instance, if I were to look at the SPX and just say I do a neutral, I got too many things open. Sorry, I might run a little slow. But there we go. Today's expiration, it automatically, by the way, adjusts the calculated moves to whatever option expiration I'm choosing. If I do 3 days, look at that. I went to 1 week to show me the probability of where it's likely to go. It's kind of cool. So I don't have to keep going back and forth or use the wrong area there. But right here, it's very simple interface, but I might be getting a little more premium at this time of day, but it may not be worth the risk that I'd be taking. Time is money. And in this case, time is risk. There's a possibility of prices moving very fast up or down. So I've been doing this for quite some time. I've experimented with entering at different times, using different things. And I found that the best rate of return that I've been able to get is by doing it, by entering in the afternoon, minimizing the risk. I mean, this is the trade tracking I have. I can show you everything. It doesn't matter, but this is the trade tracking so far for this month. And we've got a 91% win rate if you took certain actions. That is also including getting out at 5 cents or getting stopped out. Some of them don't work. You know, that's the way the trades go. You'll notice, though, the entry time, well, this trade was offered but not taken, so it didn't count. It won, but because the Fed was being meeting that day, I said, here are the levels. This is a possibility, but you probably should not take this because, you know, warning, what danger, Will Robinson, the Fed. And, you know, it worked, but I personally didn't take it again because of the risk. But what I wanted to mention with those entries.
Oh, you still there, Brandon?
Brandon Freeze.
I think so.
Rob, there's something interesting Brandon was getting into with the timing of the trades during the day that I can sort of add a little bit of more nerdy color to.
Absolutely.
Yeah. So
Do you need to take over the screen?
What's that?
You need to take over the screen?
Sure. Or he might pop back, but
okay.
Just what Brandon's talking about. So theta, which is the fancy way of talking about the decay of an option, right? So you buy an option or you sell an option. It has a price that has an extrinsic value, which is the options market assigning all of the things that could or couldn't happen in the future before it expires, right? And theta, or decay, is nonlinear. And so if you buy an Apple call and it's a month out, its decay each day is going to be minuscule. But as you approach the expiration date of your Apple call, it is going to start to accelerate. And a $3 call will quickly become a $1 call towards the end of that curve, down lower, right? So Brandon, and I've always wanted to ask him this question actually, it sounds like he sort of did it by trial and error where he picked that point in the day, because it's usually around, I'm on his texts, they're awesome, and it's right around 2 o'clock-ish, right, Eastern. And what Brandon has essentially done is he's basically picked the part of that decay curve, that theta curve, where it really starts to accelerate into the close. And you would be able to see this, like you could just watch the expected move on options AI, or you could, you know, if you were looking at a change, you could look at that at the money straddle, and it will be decaying, and then really decay into the close. And basically all that extrinsic value goes to zero, and the only thing remaining is intrinsic. And so Brandon has, you know, put his service right around those last 2 hours of acceleration, and it's pretty fascinating.
It is. I agree. That to me is a big part of it. When you look at time of day, I always have looked at it like this, as, you know, I say that the phrase "the 3 martini lunch" was developed on Wall Street.
Yeah.
11:30, 12 o'clock, the market slows down. I walk away. The big traders walk away. You'll get some of the newer guys that are hanging around trying to make a name for themselves, and they're coming back at 1:15, 1:30, even as late as 2 o'clock. And it seems that's where Brandon has picked up on that. And the great thing, guys, for all of you, it's, you know, hear what CC is saying, hear the way Brandon's saying it, the way that I'm saying it. We may not all use the exact same method to get there, but we have the same ideas of how and why things are doing what they do, and we're taking action based on that.
Mm-hmm. There's a funny comment in there, as you were saying about the 3 martini lunch. It's how do you handle midday surprises, you know, like just news that pops out of nowhere. We used to call it, in my old job when we were market making, you'd have a slow day and you'd go out for lunch. I mean, as a market maker, you could never take lunch, right? You can't leave the desk, but sometimes on slow days, you're like, oh, screw it. And we used to call it like, don't go buy a $100,000 burrito. Meaning like all it takes is one news story to pop in the middle of the day while you're out getting a burrito, which was kind of hilarious. And it was right when you got that question, because it's happened. But as far as, sort of the timing, it's interesting because since we've launched SPX options trading, I am fascinated by it. And so I'm talking to a lot of different traders and trying to get into, how they approach things. I usually do a video in the morning where I kind of have to make a lot more subjective calls than Brandon does, I notice. So when I'm looking at the market an hour into trading, I'm kind of having to determine what the current implied volatility is, what bond auction is coming out in 2 hours. I have to sort of put in a lot more subjective trading. What Brandon's done is he's removed a lot of that. And the only thing that his trades are at risk of is those last half an hour, really weird moves into the close, right? And so most days, it's going to, on a day like today, it's going to continue boring into the close. And to that question, every once in a while, something comes out, right? That's trading. And, that's why he's doing it defined risk. He knows exactly, he's got to stop, and then he's got to further stop by it being a defined risk trade. If, there's an earthquake or something at 3 p.m. Eastern, he knows exactly, if things go wrong, exactly how bad that could get, which is not that bad because it's defined risk. And that's the way to sort of think about that, is everybody's just looking for, we call it like scaffolding to their trading. You don't want to be doing some new trading behavior every day, right? Because you're going to get lost and you're going to make bad decisions and you're going to be in unfamiliar territory. If you can have sort of a scaffolding, I do this every day. This is how I trade. When things go wrong, this is what I do. When things go right, this is how I take profits. And if you have that kind of scaffolding and that kind of mentality, then you make clear decisions, without that human element, or as much removed as possible.
Right. CC is mentioning something called scaffolding, right? You guys have heard me talk about strategy creation system, SCS, right? Where identify, enter, manage, exit, build all your rules around that. Sounds easy. Most complicated thing you're ever going to do is come up with a good, efficient system. But what I want you to take away most of all from today is this. Brandon offers a service that he's sending them to you. Take them, don't take them is up to you, but he's giving you the details and helping you to identify. And then you can look back and see, okay, why did he pick this here? Why did he pick that there? And he will tell you the zone is here. There's a 15-minute zone here or a 30-minute zone there. He will give you that detail. You take that information, bring it over to an options AI. And of course, you can use any service you want. You can use any broker you want. You can use any education company you want, right? I brought these two together because I don't think there's a better combination of taking what Brandon does and adding on top of that what CC and Options AI does, I guess, and combining them together to give you the best 1-2 punch you're going to get at all in the market right now. So we're going to do this. I know there's a lot of questions in here, guys. We will get to as many of them as we can. I'm going to go through them quickly. I know Brandon answered a bunch. He's back.
On his phone.
I'm on my mobile phone, so back up here.
So no more no more charts on the screen. That's off of the computer now, so we're good. But when we talk about that, I want to reiterate that with Brandon, with what he had up on the screen, guys. That it was, what were you up this month, Brandon? 300 and change.
Yeah, about 300 plus. We're only partially into the month as well, which is kind of neat.
Absolutely. And what I want to get at is that's a $2,000 account doing one contract. So someone that sits there and says, this isn't worth my time, add contracts. My good friend of mine says the juice isn't worth the squeeze. He talks in big numbers, right? He's like, if I can't make $500,000 a month, the juice isn't worth the squeeze. That's him, right? Not in trading, in a different business aspect, right? If that juice of $300 for the month is not worth the squeeze, add more contracts is what I'm saying to you. CC, how does the commissions work on Options AI when it comes to directional and then to, and you can give broad, I know there may be some variations to it, but directional and then to these types of condors or spreads?
Yeah, so I'm dropping in a link, and it's a special for people attending. So the way our commission structure works is, first let's start with SPX. There's no monthly fee, there's no monthly data fees or anything like that, and we are 45 cents a contract for SPX trading, right? And that is one of the lowest out there. Most are in sort of starting at 65. Coming down, if you're a big trader, maybe your brokerage gives you 50. So we wanted to come in right below that. We wanted to be very aggressive on this. That link that I just dropped is as a special, using that code, that sign up code, we're giving the first 45 trades commission free, and that includes SPX. So you can come on the platform and do your first 45. You notice the 45 thing, that's the theme. First 45 trades. Now, going to the other symbols, going to SPY, Qs, Apple, Amazon, GME, what we do is we charge a flat commission of $5 a trade, right? And so what that means, and that was what we wanted to do with that, is we wanted to flatten or put on equal footing an iron condor with a call, right? And we didn't want people making decisions based upon the call being the less expensive from a commission standpoint or something. We wanted somebody to be able to do a 10-lot iron condor in Apple for $5, right? And so you could do a 100-lot iron condor in Apple, and it's $5. So it's SPX is 45 cents. Everything else is $5 a trade.
So that's one contract or 100 contracts, it doesn't matter.
Exactly. Yep.
I hope y'all got that. If you're looking at your commission saying, wow, what am I paying? It's definitely worth talking with CC and his team to figure this out. Now, CC dropped the link in, and I didn't go that far down in the chat yet, but I'm sure it's in there somewhere. Lee's going to drop it in as well. And then, guys, Brandon, what he does with his SPX, with his service, is phenomenal. We're going to give a discount, a coupon code. Lee, can you drop in that link and the coupon code? I think the coupon code will drop $50 off for you. Let's see. I see Lee dropped in the Options AI one. He also dropped in Cash Flow Secrets.
Cash Flow Secrets, yep.
And then Lee, can you drop in the coupon code as well, which I've got it open somewhere here, is Secrets with a capital S. But just type it in as coupon code. I gotta tell you guys, I don't know about you, but I had a tremendous amount of fun with this today. Oh, thank you. And that coupon code is for the quarterly. Thanks, Lee. You also get a 2-week trial with this, folks. So here's the thing. You jump in. This is the way I would do it. I would go ahead and jump and get Brandon's SPX. CC, on your platform, there's also a practice trading or non-funded component of it as well, correct?
Yeah, you can start with a subscription, and the subscription, you'll see it in the checkout, and you can sort of start with that, and then you can upgrade to a brokerage account.
Okay. And guys, the way to go about it is start taking what Brandon does and learning it, jump in all the trainings he does, jump in and use what CC does in Options AI. And by the way, CC and I have become friends through Brandon, actually. Brandon had met him first. And we came to an understanding that I did not want him to pay me money for saying, oh, we got you a brokerage customer. Correct, CC? I mean,
yep, exactly. Yep.
We were very open with that right up front of, listen, if we can help each other, and I'm very big in this arena, if we can help each other with, an individual, or if I can provide a service to your clients and you can provide it to ours, then we definitely need to take advantage of that. Right. Yep. So 45 free trades. So you go and start off with the 45 free trades. You do the practice trades as well on what Brandon does. Guys, it's an absolute no-brainer. What is the account minimum, CC, for opening up?
No account minimum. Yeah.
There you go, guys. I mean, come on now. When you see
don't put in $5. Don't put in $5.
I was going to say the $5 videos on YouTube. You can only you trade with only $5.
Yes.
But if you're someone, Trader Will, who's trading a lot of contracts, this may be something that becomes very viable. The Hakanashi scalp may be something that becomes very viable. And I'm talking specifically to some of our individual students here through our inner circle and mastermind and so forth. and any of you that are trading decent size, that $5, if you're doing an iron condor and you're paying $1 a contract somewhere else, that's $4 to do one. You do two, it's $8. Here you're doing $5 and you've got unlimited number, regardless of the trade, as long as you're doing it as a married position, right? It's a singular entry. You got to enter the entire iron condor, not a both put spread and a bear call spread separately. You got to enter each one individually, correct?
Yeah, but somebody asked me a question, like if you were legging in and legging out of a lot, if you had a certain behavior on the platform where that was obviously, you know, costing you money that it shouldn't be costing you, absolutely, you just hit customer support with an email and they'll figure it out, and they'll get it to where it's about the same.
Excellent.
Yep.
Excellent. Brandon, you got some last words for us about SPX and the analysis and how the service is going?
It's been great. Like I said, I've been trying to. I stay with my system, which is my plan, and it's the same plan that I share with everyone. So again, it's about building a routine that you can recreate over and over and over again. You build that consistency, and you get the positive results. If you're not getting positive results, at least you know where to start from, what base, fix the plan. Most of the people that end up coming to me, and I've been doing education for almost 20 years as well in this realm, they don't really have much of a plan. They kind of just go out and say, well, I'll try this today or I'll try that. And when things don't work, they have no idea why. So it's great to have someone that you can work with, like myself or CC or Rob or whomever, where you've got a mentor that can kind of guide you, give you a plan, and guide you along with that plan to use it on a regular basis and get the right results. I mean, that's the thing. Obviously, if you're here right now, you probably are here because you're not completely satisfied with what's going on in your personal trading and you want to make it better. So that's what we're trying to do, is help you to do that. And as far as what I do with the SPX, it's been very consistent for me for many, many years, and something I will continue to do for a long, long time, because why not? If it works, keep doing it.
You know,
So I'd love to have everybody join me there.
It's funny. I heard the same type of comments or points from both Brandon and CC, and I want you to look at it this way, right? CC talked about it, that you're seeing a lot of traders shifting over to this type of a model. Brandon's talking about the successes that he's seeing in it. I look at it like this. Brandon's a successful trader. To what level of success? Guys, we had a broker come to us and say, I'm a money manager. I am starting to manage individual money, and I want to do this with options trades. Can you train us on it? And I said, I can, but Brandon is better to do this because he's the hedge fund manager. He came from this world. Let me get you in touch with him. And sat with them for part of the day. Brandon did the teaching. I was more the listener. Sat with them for that day and listened to Brandon train on exactly how a brokerage firm can step out there, you know, a financial advisor, and buy very large lots of options contracts and what's going to happen to options pricing in there. Right. So you've got a lot of experience here, and both sides, CC and Brandon, telling you SPX, 0 DTE type options are the trade that people, we're seeing a lot of focus on from traders today, both new and existing traders. And if you can just take one strategy, if you're already a successful trader, and I hear this all the time, I don't really need that, I'm making money in the market, great. So if Brandon's willing to hand you trades every day that is consistently, if you followed every trade now, and he shows everything as a non-funded trade, consistently showing results that are positive, you wouldn't just add that into the mix of what you do. Oh, I got a text. Oh, great. Let me go place that trade. Boom. And you're done. Right? You need to take advantage of these types of things. These are the things for 2024 that'll help set you apart from other traders. And this is the time to learn it, is now. So, Brandon, I appreciate you being here very much today. CC, as well. We've got your links in there, CC. So hopefully, you guys, you will reach out and have some conversations with CC, and of course, get into Brandon's trainings. But did you guys like this training? Give me a 1 for yes, a 2 for no. And don't worry, Amelia's in the room. She's waiting to eject all the people that put a 2 in there. All right. Lots and lots and lots of 1s. Great start. There you go. Oh, excellent. Excellent. All right, everybody, we're going to leave the room open for a couple of minutes. You can grab the links that are in there. Once again, Brandon, thanks for being on. CC, we appreciate you taking the time out. I know it's middle of the day and people are trading right now, so we definitely appreciate you doing it. And you all have a great day. God bless. See you all at our next update. Take care, everybody.